President-elect Trump has now finished filling his core cabinet positions, and hedge fund manager Scott Bessent will lead the Treasury Department. The surprise was Representative Lori Chavez-Derrimer as head of the Department of Labor. One pick has got the markets rallying, while the other, well, that's going to leave a few more question marks. For more here, let's bring in Strategas Dan Clifton, along with Cowen's Paul Gallant. It's great to have you both here. Just kind of break this down for a second. A lot of questions around both of these. Dan, let's start with you. And sure. I wrote about this earlier, but I thought it was interesting that everything about the Bessent pick seems to be helping the markets rally. But we did briefly reinvert, and that's not his fault, but the long year fell somewhat, and the 2-year, which has an auction around now as well, did not. So I just take that as a warning point for markets.
Well, yeah, look, I think there's now certainty and clarity, and that's most important. We had about a 2-week process where it looked like Game of Thrones meets House of Cards on who was going to be Treasury Secretary. Now you know who that's going to be. So one is just a rally in there. But what you see underneath the surface tells you a very good story. We thought bond yields had to come down. You now have a catalyst for bond yields to come down and the dollar to come down, particularly as the liquidity comes in. And then if you look at specific stocks, like all of the trade stocks are up very big today. That's China, that's Europe, that's Mexico. Some of that is just a knee-jerk reaction, and it will start to revert itself back. We still believe tariffs are going to go up on China, but I think the market's starting to pull back its expectations on a universal tariff today. That's probably the right way to think about it. Trump is going to do tariffs. The question is how, and now you got somebody who knows how to both manage the president's goals and making sure the U.S. economy does not go into a recession. And then the third leg of this is that you got to get a tax bill done. You got the largest fiscal cliff in American history. You now have a Treasury Secretary who understands these fiscal issues and the liquidity issues around this, and he'll be able to manage that process overall. So there are 3 different dynamics going on at once today, and under the surface tells a larger story than just those kind of headline numbers that we've seen. And I know you always find ways to make it investable. So what are you telling clients about, now that we've filled in some of these remaining question marks, and with some of his tactical policies? I mean, the 333 plan would, ideally, I guess, include lower energy prices. But what are you guys actually talking about? Yeah, look, I think from a macro perspective, you had a big rally in the dollar, a big rally in the bond yields. Those are now starting to reverse, and I think that will continue as the liquidity bazooka comes in the first quarter. So now you have a reason. That's on the macro, and if that's the case, Kelly, then some of the sector rotations can change after that kind of post-election rally, and things that are rate sensitive could start to reverse, like home builders and other areas, things that really did get hurt, stocks that really did get hurt after the election itself. And then third, we still believe tariffs on China are going to go up. So you want to stay away from those tariffs. They're having a bit of a rally, outperforming today, but they are going to get hurt. And then obviously you got to just kind of monitor what the rest of those trade issues are going to be. There will still be a lot of headline risk over Europe, over Asia, and other areas which can get hit with a universal tariff. But I think that's way out in the distance, and not something that's going to happen imminently. Those are great points. I also think the biggest factor in some ways is going to be the direction of inflation. A lot of people would immediately look to Trump policies for that, but as we know, that's not, inflation's usually a monetary phenomenon, so we kind of look to the Fed for guidance. So maybe they will play as big a role as any kind of policy in terms of what kind of economy he actually ends up presiding over. I would agree with that. And obviously, Trump's going to jawbone on the Federal Reserve moving forward. But now you got Bessent. He really understands these issues. He's an expert on things that happened in Japan 10, 12 years ago. And I do think that you now have some good coordination between monetary and fiscal policy. And I don't mean that in a bad way. It's just that he's a very good, he understands what is happening on the Treasury liquidity facilities. Not many people understand it. It's brand new. It started after COVID. And Kelly, as you know, this is a guy with 30 years of experience of working with finance ministers. He's very experienced in Japan. And so as we start to see that, we expect that there's going to be more foreign buyers of Treasury coming into the market, particularly in the second half of the year. That's going to enable Treasury to be able to extend out our debt without having a big liquidity rise. So he's got a really big balancing act. He's got the most challenges that any Treasury Secretary has been facing in 30 years. But he also has the tools and the knowledge and experience to be able to solve some of those issues. I think that this was a very good pick for incoming President Trump. It is eerie how his bio and his areas of interest are kind of exactly what we need to do on the debt front now. So it'll be very, very interesting to watch him put that into practice. Dan, as always, thanks. Really appreciate it. Thank you.